Hey everyone, it's Julie here with Tip Ranks. Today, we're taking a look at 3 tech stocks that hedge funds have been buying millions of. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today, we're taking a look at a few stocks in the tech sector that we've seen some notable increased hedge fund activity on. These hedge funds have been buying up millions of dollars worth of these shares. And on top of that, they also come in with a strong buy consensus from Wall Street. So we're going to take a look at these companies, what it is that they do, and of course what those analysts are predicting for the stock's future. How did we find today's stocks? On the TipRank stock screener, of course. Found underneath the screener menu, here I put in a few different filters, including a strong buy consensus, double-digit upside potential, and the tech sector. I then went into add filters to include hedge fund signal, which we then filtered to have a positive hedge fund signal. You can try the stock screener for yourself on the TipRanks website or right on the TipRanks mobile app. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into these 3 strong buy tech stocks. First on the list is ARM Holdings. They trade under the ticker ARM, currently priced at $134. In the past year, they've gained 6.7%. In the last 3 months are up slightly at 1.4%. ARM Holdings designs and licenses chip architecture used in devices like smartphones, laptops, and servers. Their energy-efficient ARM architecture powers over 99% of smartphones globally, including chips from companies like Apple, Qualcomm, and MediaTek. They don't manufacture chips themselves, but provide the intellectual property and instruction set architecture that others use to build processors. ARM also develops software tools and collaborates on AI and machine learning solutions, with their tech in over 280 billion chips shipped worldwide. In the last quarter, hedge funds increased their holdings of ARM by over 6 million shares. And that was a big increase from the previous quarter. Looking at the list down below, we see some brand new positions, one at nearly 750 million, and others making notable increases to existing ones. On TipRank's AI stock analysis, they do score and outperform. While operating expenses may remain high over the near term, they do expect their ARM CPU share at top hyperscalers to reach nearly 50% this year, representing significant market penetration. They're also setting up multiple long-term boosters like chiplets, Project Stargate, data center CPU share gains, and Edge AI. Their Q1 earnings report came out at the end of July. Earnings per share of 35 cents were in line with analyst expectations, while revenue grew 11% year-over-year to $1.05 billion. That marked the second highest revenue quarter for the company. They also saw record royalty revenue reaching $585 million. In mid-August, we did hear from an analyst at Seaport who initiated coverage on the stock with a buy. They believe ARM is creating significant value for the semiconductor industry. The company seeks to extract a larger share of the value as it expands into new markets and deepens its content offerings. They expect ARM's penetration into its key markets to grow both deeper and wider. The ARM stock has 23 current analyst ratings, coming in as a strong buy with 18 buys and 5 holds. The average price target is $171, implying an upside potential of over 27%. Looking some of those most recent ratings, we do have one buy rating at 115, which would now be a downside of 14%, and high-end price targets up above 40%. For our second stock today, we're looking at Amdocs. They trade under the ticker DOX, currently priced at $84.49 per share. They are down slightly over the past year at 1.2%, and in the last 3 months have fallen about 7%. Amdocs is a multinational company providing software and services for communications, media, and entertainment. They specialize in customer experience systems, offering solutions like business support systems and operational support systems for billing, customer relationship management, and network management, along with cloud-based solutions, AI and generative AI platforms, and different managed services. They serve telecom operators, media companies, and financial services providers, helping them manage and automate operations. In the last quarter, hedge funds increased their overall holdings in Amdocs by over 357,000 shares. While this wasn't a drastic jump upwards, it was definitely an increase from the previous quarter. Looking at that activity down below, we can see one brand new position there and others increasing their existing position, one of them reaching nearly $600 million. And on the TipRanks AI stock analysis, we have another outperform. While the company noted continued industry spending challenges, their cloud initiatives do continue to generate most of their growth, with cloud accounting for over 25% of their revenues and growing at a double-digit rate. Their backlog also increased by $80 million quarter over quarter. They saw both an earnings and revenue beat for their third quarter, which they shared on August 6th. Earnings per share of $1.72 was 1 cent ahead of analyst expectations, while revenue grew to $1.14 billion. They also saw managed services revenue hit a record of $771 million and free cash flow of $230 million. Their stock does just have 4 current analyst ratings, but comes in as a unanimous strong buy. And the average price target of $105 implies an upside potential of nearly 25%. Looking at those price targets down below, they range from 18% to 31% upside. If you've made it all the way to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Third on our list is Teledyne Technologies. Trading under the ticker TDY, they're currently priced at $549. The stock has climbed 26% this past year, and in the last 3 months is up just shy of 9%. Teledyne is an industrial conglomerate providing advanced technologies to various high-reliability markets. They serve industries like aerospace, defense, oil and gas, factory automation, and medical imaging with products in over 280 billion chips worldwide. They operate in 4 main segments with their digital imaging, instrumentation, aerospace and defense electronics, and engineered systems. In the last quarter, we saw hedge funds increase their overall holdings by 1.5 million shares. And that was a notable increase from the previous quarter. Looking at that activity down below, once again we have quite a few brand new positions, one of them totaling $767 million, along with a few increasing existing positions. And there's a bit of a trend here as we have another outperform on the TipRanks AI stock analysis. One of the biggest questions in the company's outlook is whether the Q2 upside in the short cycle business will come at the expense of future demand. But results did come in ahead of consensus, and the company raised their guidance. Their orders remain excellent, and they saw acceleration to new all-time highs. And that was from looking at their Q2 earnings report near the end of July, where they had an earnings beat and record quarterly sales. Earnings per share of $5.20 was 15 cents higher than analyst expectations, while revenue came in at $1.51 billion, with a 10% increase year over year. Their orders exceeded sales for the 7th consecutive quarter. Following that, we saw quite a few Wall Street analysts increasing their price targets, including a 5-star analyst from Bank of America. The firm continues to see upside risk in the long cycle markets, especially aerospace and defense, as well as upside opportunity on the eventual short cycle recovery. The Teledyne stock comes in as a strong buy based on 8 current analyst ratings, with 7 buys and 1 hold. The average price target is $612, implying an upside potential of nearly 12%. Looking at those price targets down below, again, you can see a lot of analysts increasing those price targets. They range from an upside of nearly 6% up to nearly 17%. So that is a quick look at 3 strong buy tech stocks, all with a recent uptick in hedge fund activity. Let me know your thoughts on these 3 companies in the comments down below. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.